Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the halving because that is what's upon us from tomorrow. And as per the title of the video, I'm going to show you in the charts why the halving marks a significant milestone as the beginning of the final phase of the Bitcoin cycle. And I'll also show you how that has fared for the Bitcoin miners and why the halving presents the greatest opportunity of a lifetime every 4 years, and it's upon us tomorrow. I'll also be looking at the expected targets. One question I keep getting asked many times is, where is the top of this bull market? As you know, I really don't want to predict anything. My target is based on the Fibonacci retracement, and we'll go through the Fibonacci retracement to see exactly what's happened in the past in order to extrapolate what is the possibility and the probability of what may happen in the future towards the end of the bull market to give us some kind of an end price. I'll also have a look at the 60-day cycle and all the usual good stuff. So if that sounds interesting, without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, let's get straight into this halving because it's right upon us. We're at the doorstep and we're asking the question here, why is the halving the greatest opportunity of a lifetime every 4 years? And you'll probably notice some extra lines on the chart of the default setting that I have on this BLX chart. And that is these blue lines, and I'll go through that in a second. But what I would just want to point out to you, very important, please take note. If you missed this bottom here in the first cycle, then your second real chance of getting the top at the end of that first cycle was exactly at this point at the halving, this red line here. And in the second cycle, if you missed the bottom here, then the halving presented an incredible opportunity as a second bite of the cherry to get you to the top of that cycle there. And if you missed this bottom here in 2019, then the halving presented an amazing opportunity to give you the second bite of the cherry to get you to the 64 and the 69,000. And guess what's happening now? If you missed the 15,400, the current halving that we've got now at the previous all-time high of around the 60 to 69,000, this is giving you a great opportunity of a lifetime to give you a second bite of the cherry to get you to exactly where we're hoping the end of the bull market will be. And we'll have a look at some of the target prices based on the Fibonacci retracement. So let's have a look at the first cycle here and ascertain exactly what happens at the halving to build up a picture of what we can expect from tomorrow onwards. So here we are, the first cycle, the yellow line is the end of the first cycle, which went to the top here at this point. The halving was on this red candle, and I've put the blue line here at the bottom of that candle. So you can see from that date onwards on the monthly chart, this candle marked the lowest point of the rest of the bull market. And if we move to the second halving, and once again at the halving itself, you can see the blue line I've put down there. We had one candle which closed below it, which was the following candle, but the candle after that one brought it back to the bottom of that candle on the halving itself. So we had one candle out of sync, but you can see that on the whole, this candle marked the beginning of the parabolic move to the end of that bull market at 20,000 in December 2017. And from the top of that candle to the bottom of the following candle, we did have around about a 30% fall after the halving. So out of 2 cycles up to this point, the first one marked the exact bottom. The second one had one candle after it with a 30% fall. And if we move to the last cycle, the halving here in May 2020, once again, the blue line is marking the bottom of that candle. So that was the lowest point before the end of the bull market at 64,000 and the double top at 69,000. So we can safely say that 2 cycles out of 3, the candle on the halving month was actually the very bottom of the bull market at that time. So there's a 66% probability that when we go into the current halving from tomorrow, this is the candle so far, and the bottom of that candle is currently at 59,750. We've still got 12 more days to the end of this month, and that should, with a 66% probability, mark the bottom of this bull market and mark the start of the parabolic phase to the end of the bull market, which can be anywhere in this square that I've marked out for a long time. So we're now going to have a look at exactly what that percentage could be. But you can see that the halving is a significant milestone for the Bitcoin 4-year cycle. And this may well be the last and final opportunity that those of you who didn't get in here at the 15,400, this is now the second bite of the cherry. But we know from market psychology that very few of you will get in at this point because there is a correction underway, and when there is a correction, everybody's expecting lower and lower and lower prices, exactly like what happened here, but nobody got on board. And this is exactly the same psychology that's happened over here is currently happening here. And everybody's calling for a 52,000 fall here, which may or may not happen. There is a good probability it may happen, but other people are calling for back to 40 and etc, etc. So once again, the same psychology is playing out. And all I can see is a greatest opportunity of a lifetime. Every 4 years it's presented to us, and it starts from tomorrow. So let's have a look at, based on the previous history of the Bitcoin chart, what the target price should be in the next 6 to 12 months when we're expecting the end of the bull market. I think a lot of people find this part really exciting, and it's something that we should be inspired by, because if you've been invested anywhere along here, then you will want to know what possibly could happen here based on the charts. Please remember, I'm not predicting this. This is not my opinion. I'm just basing everything on the charts, what the charts are leading us to. So we're eliciting the information from the various indicators to give us some sort of a guidance, some sort of a clue, some sort of an idea of where we could possibly end up here based on what's happened in the past, in the last 3 cycles over here. So if we use the Fibonacci retracement from the top of this market here to the bear market down here, the thing to note will be where the Fibonacci retracement comes up to. So we can see that this top here, the end of the first cycle, came to a 2.272 level and just virtually touched the 2.36 level. So anywhere between 2.272 and 2.36 was where this top came to over here. So keep that in mind, 2.272 and 2.36. If we go to the second cycle, the top here at 1170 to the bottom over here, we can see one more time the top came between the 2.272 and the 2.36. So that's two cycles out of 2 were exactly the same in terms of the target price for the end of the bull market. And the previous cycle from the 20,000 top to the 3,100 bottom here. And if you've been watching my videos for a few years, you'll know that my target for the last cycle, which topped out at 69,000 here, was based on this Fibonacci retracement of 250,000, which was the 2.36 level here. And this failed to come up to that level, so there was a big gap there. And what we did was to actually top out at the 1.618. So in the 3 cycles, we've topped out at the 2.272 and the 2.36 for 2 cycles, and 1 cycle at 1.618. So now we know that in the 3 cycles, we've used these numbers here. And based on these 3, we can extrapolate that with a high degree of probability, the current cycle should end anywhere between the 1.618 and the 2.272 stroke the 2.36. So what are the target figures for the 1.618 and the 2.272 and the 2.36? So if we go from the 69,000 top here to the 15,400 bottom, so the top target based on the Fibonacci retracement, which is based on the previous 3 cycles, is giving us a target here at the 2.36 at 525,000, and the 2.272 is giving us a target of 460,000. So that is at the top of this box here. And if we were to replicate the last cycle at the 1.618, this level here, that would take us to 173,000, which is the bottom of this box here. So these are the 2 targets that we have been able to elicit from the Fibonacci retracement based on the historical price record of Bitcoin over the last 15 years. And should we get to those 2 price targets from where we are now, and based on the current 61,000 as we are today, if that was the low for this month at the halving, to the 1.618 at 173,000, that would represent a 184% increase from where we are now. And should we go to the next level, which is at the 2.272 and the 2.36, that would give us an increase of between 6.5x and 7.5x. So these are the targets based on the Fibonacci retracement. And always remember, you can't hit a target that you don't have. So it's good to have these targets, but always be open, fluid, and flexible. We may get a completely different cycle like we did in the last time at the 1.618. It didn't tally with the 2.36 or the 2.272. So we've got to always keep that in mind. So I hope you found that interesting. interesting. So the main question of this video is, how is this the greatest opportunity of a lifetime in terms of what we can do? So we're expecting this particular target here, and it may well be the last chance for people to get on board at this particular point. What we do know is that there is a law of diminishing returns from the halving here to the top of the market here was about 118, 120x. Now if we went to the second cycle, from the bottom of the halving point here to the top, that was around about a 30x. So we've gone from 120x to 30x, and the third cycle from the halving to the top was around about 7x. So 120, 30, and then 7x. And as I've just shown you, from the 61 to the first target is going to be about a 2x, and to the higher level is going to be around about 6 or 7x. And for those of you who are looking for far larger returns than that, could do worse than having a look at the Bitcoin miners. What we have in the crypto space are 3 different levels of investments. The first one is obviously Bitcoin and Ethereum, and then we have the altcoins. But we also have this third element called the Bitcoin miners, who are a proxy for the Bitcoin, just like MicroStrategy is. And what I've done is, in the last cycle, and we only have one data point, so this is as reliable as it's going to be in terms of just one data point and not anymore. So we can only go by that data point. And that is pointing us to the percentage increase from the halving to the end of the last bull market in 2021. And this is what we got. These were the Bitcoin miners who were on the NASDAQ and were able to demonstrate what can happen after the halving with these miners. The best performer was Marathon at 120x, and the other ones went up by these amounts here, as you can see quite clearly. So these are figures which are a leverage play on the Bitcoin price. So while Bitcoin went up by 6x, these Bitcoin miners went up by a multiple of that. While we don't expect the Bitcoin miners to go up by these levels this time around, simply because there is the law of diminishing returns, but certainly whatever the Bitcoin goes up by, there is a multiple leverage play going on with the Bitcoin miners. And of course, with the leverage play on the miners comes a higher volatility. And this is what's been going on over the last 4 or 5 weeks, when we've just had a 50 to 60% correction with the Bitcoin miners. And this is the time when people don't want to get on board because they're expecting the prices to go lower and lower. And currently, they may well be presenting one of the best opportunities in this 4-year cycle. And if we have a look at the Marathon chart on the weekly time frame, we can see quite clearly that from the end of February, just like a lot of the other Bitcoin miners, this has suffered around about a 58% fall. And just like the previous falls into this support line, we've had these big massive moves to the upside. So while there may well be a little bit more to go here, the risk reward to the upside has a huge potential after the halving. And this is the same with CleanSpark. We have support lines here, and it's now fallen onto that support line. So if the previous cycle is to go by, we should get after the halving a very big move to the upside. And these are the opportunities that lie ahead. But obviously with those opportunities, as I mentioned, you get these big massive falls to the downside. And if you haven't got the stomach for that, then this area is definitely not for you. So the Bitcoin miners are a dynamic element in the crypto space where there's very high volatility, it's high risk and high reward. And the current fall for CleanSpark, as you can see from the top here, to the bottom was around about 45%. And on the Bitcoin miners, in the private member section, what we do cover are these things here. We do the Bitcoin mining analysis like we do here, but we also use the 60-day cycles for the swing trades, which we've done over the course of the 2023. But this time around, because we're in the last phase of the bull market, we are no longer doing the swing trades, but we've now replaced the swing trades with what we call the ratio trades. And I'll give you some example of exactly how those have helped us to increase the positions in the portfolios that we run here. We also do a tracking of that long-term portfolio, which we've divided it into 2, one a passive one and one a trading one. And we also do member requests for anything else that the members are interested in. So these are the ratio trades that we've done so far with the Bitcoin miners. And I showed you one of these examples in the last video, where I showed you that from the 24th of January, we took 2,811 units of Riot, and we bought 13,000 of the Cypher units. Then with the ratio trade, we swapped the 13,000 of the Cypher units over here on the 31st, i.e. 1 week later. We swapped the Cypher units of 13,000 to 3,600 of the Riot. So that was a swap. So at this point, we started with 2,811 units of Riot and converted them to 3,683. So then we used these amounts of units one more time to swap back because the ratio trade was in our favor. So we took the 3,683, over here on the 5th of February and bought into 15,841 of the cipher. So you can see that we went from 13,000 cipher to 15,841 cipher here. So one more time, we took this number of units of cipher at this point and converted that into 4,429 of the riot. So you can see with just 4 trades between 2 Bitcoin miners, we took 2,811 riot all the way to 4,429 in the period of around about 6 weeks up to that point. And currently we have this particular trade going on now between Marathon and CleanSpark, where we identified it about just over a week ago, and the ratio was at 1.18, and currently that ratio has now dropped to 0.97 at yesterday's close. So we're about to close this trade now, where we're going to swap the 2,684 of the CleanSpark units back to Marathon, which should give us around about a 20% increase in these original units we started off by selling on the 9th of April. So we will be doing the various ratio trades between now and the end of the bull market when the opportunity presents itself. But so far this year, we've done around about 11 trades. And if you want to join us with the Bitcoin miners and you're happy to take on the volatility with the potential rewards, then you can join us here. And yesterday I did one of the videos for the members, which we do on the Wednesdays and the Fridays. And we also do these updates every single day at the end of the close of the trading session. So these are the kinds of things that we do, all related to the Bitcoin miners. So if you want to join us, all you have to do is click the join button below any one of my videos, and also it's in the description box. And for the price of a coffee per week, you can have access to all the previous videos as well as all the current market updates on a daily basis and all the future ratio trades. And finally, we're going to move on to the 60-day cycle to see exactly what's happening with Bitcoin and what we can expect within this 60-day cycle that we're in now. So the cycle started here on day 57, which was the end of the previous cycle, and that was on the 20th of March. And so far, the bottom of this candle here, which is at 60,760, we haven't actually closed below that yet, so this is not a failed cycle as yet. But if we close below this candle at this point, 60,700, then we will have a failed cycle here. But as we've seen in the past, whenever we go into the midpoint of the cycle, we do tend to get a bit of a rally from that point onwards. So we should expect some sort of a rally, especially after a fall that we've had here. So this fall so far, from the top there, has been around about a 17% fall. And we can see down at the bottom here, the stochastic RSI is right at the bottom, and it's below the 20. And what we're really waiting for is an upturn of the green line above the red line and poking itself above the blue line here. So this is the sign I'm waiting for this upturn. So we may still have a little bit more to go here, as the RSI is also confirming that it's just above the 30 level. But as we know with Bitcoin, it can turn around at any time. So the RSI and the stochastic RSI and all the oscillators and the indicators, they're just there to give us some kind of a guidance in terms of the probabilities and the possibilities. And we know from the charts there are no guarantees and no certainties. All we have to do is elicit the information from what we've got at our disposal here. So the end of the cycle is due to come to the end on the 19th of May. And so what I would expect between these 2 points is some sort of a rally, and if the rally stays within these parameters here and goes sideways from now on, that would be an incredibly bullish development, because that would set the scene for a good consolidation all here, which would reset all these indicators and oscillators down here for a big push to the upside. And that may well be the final phase of the end of the bull market. So it could be 6 months, it could be 12 months, but if we continue with the sideways and consolidation, that would actually help the bull market, because it would elongate it and give it a little bit more of a push towards the higher side at the end of the bull market. And we've seen the 2 targets. The longer the consolidation goes on, the higher the probability of the higher target being met. And if we have a look at the weekly time frame, we can see quite clearly the 8 EMA, where we burst through here back in October 2023, and we found support multiple times over here and over here. And this candle hasn't closed yet, but we are now breaking below the 8 EMA on the weekly chart. And if we can close above the blue line by the end of Sunday, that would be incredibly bullish, because it would leave another wick at the bottom here. So that would make it 1, 2, 3, 4, 5 wicks. And that itself creates an incredibly powerful move to the upside, because what it's really saying is that there is a huge rejection of lower prices, and there are people out there buying up these dips in a very aggressive way. So let's see what happens, but this is what the charts are telling us at the current moment. The level to look out for once we break this level here at the 60,000, the next level is really at this point here between 51 and 52,000. But you can see with the 21 exponential moving average, the yellow line here, this is giving us hope that the chances of the price falling to these levels at 50, 51 is much less of a probability because we've got a rising 21 here. So if this consolidates like this, then the chances are we're going to meet this 21 exponential moving average and find support maybe at the bottom of this candle at around about 59, 60,000. So this is where I'm hoping that the yellow line will come and cross and the consolidation down into that 60-day cycle low before the big bounce to the upside. And we had a look at the wider markets in the Monday's video, and we had a comprehensive look on the SPX as well as the gold and the dollar, and the wider markets haven't really changed since Monday. So we'll call it a day here. Hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.